All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to Investing 101, How to Know When to Sell a Stock, presented by Sandy Chaikin. Joining us in a few moments will be Sandy Chaikin, co-founder of Chaikin Analytics. Beforehand, though, please remember that throughout this presentation, please submit your questions using the Zoom webinar Q&A window, which you can access in the upper left-hand corner of your screen. Michelle Greenblatt and I will be available throughout the webinar to respond to your questions. And of course, as a reminder, this webinar is being recorded and will be sent to everyone who is registered. Now, a bit about Sandy Chaikin. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy has also presented at NASDAQ and industry conferences on fearless investing. Now, prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that has spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She is also a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. Now to get us started, here's Sandy Chaikin.
As Joe said, we're going to be talking about how to know when to sell a stock. And I have to say, this is the #1 question I always get, and Joe and his team in customer support get as well. So we're going to address it head on today and give you some clear-cut guidelines of when is a good time to sell. But first, we're going to go through when to buy, because before you can sell, you've got to buy, right? So most of the, or just about all of the stocks I'm going to be using as my samples today are stocks that I've owned or have owned or are considering owning. So I speak from my own experience, and as Joe said, I just started investing in 2012 when Mark and I co-founded Chaikin Analytics, and I started investing knowing that I needed to understand this if I was going to be marketing it. And that has opened up a whole new world for me. So what I love doing now is sharing that knowledge with you all so that you too can become fearless investors if you aren't already. All right, so first I need to briefly read this disclaimer that Chaikin is not registered as a broker-dealer or investment advisor with the SEC or with any state securities regulatory authority. Chaikin is not for Chaikin is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results, and users bear sole responsibility for their own investment research and decisions. All right, I always like to start by framing the conversation with what's going on in your head right now and what the situation is, primarily for individual investors, because that's primarily the audience we're talking about today. So while the S&P has grown an average of almost 10% a year over the past 20 years, individual investors have done a lot worse, only 2.5%. And the research shows that the primary culprit for that is that as individuals, we tend to buy on emotion and not fact. And that's really what today's presentation is all about, is getting those facts straight and a clear-cut guideline and path to profit so that you're not trading or investing on emotion, but basing it on a disciplined methodology that actually has been proven to work. And as we said, the focus today is really how to know when to buy and when to sell, with an emphasis on when to sell. So my promise to you over the next hour is that you're going to discover how to find winning stocks and make buy-sell decisions with confidence. And I underline with confidence, because it's my firm belief that if you're not a confident investor, you're not going to make good decisions. You're going to either not make a decision at all, you're going to be fearful, hide under the covers, not make a decision, or you're going to make a bad decision. So Confidence is really what I'm trying to instill in each one of you so that you can make really good, sound investment decisions for yourself. So what we're going to be talking today is how to find these great, what we call bullish rated stocks. Now, these are the big performers of 2016 that were in my portfolio. And note that I hold 8 or 10 stocks at any given time. So the 5 here are pretty strong, right? I mean, the S&P was up an average of 10% last year. These are some triple-digit winners like Centa, Quad Graphics, NACO. These are all look pretty good. But I caution you, I would not write any of these down today because these are past performers. You know, the landscape has changed, and there's a new slew of bullish rated stocks that I'm focused on now. None of these I own now, nor would own now. So that just goes to show you really have to keep monitoring your account, monitoring your portfolio, because the landscape changes, as we know, every day. What is the point of all this? Why are we investing in the first place? Well, obviously to put some money away for our retirement accounts, but we also want to celebrate and have some fun along the way. And so what Mark and I have been able to do is to take some really terrific trips to Turkey, to Vail, Colorado, to Rome, all on the profits that I've made investing in stocks. The trip to Turkey for 2 weeks alone was just from one stock, Southwest Air. That was one of the big winners of 2015. And I got in on that early on. So this is all possible. I mean, if I'm a novice just learning this since 2012 and I've been outperforming since I've been investing, you can do this too. So that's really what I want to impart with you, give you that confidence again. All right, so why should you listen to me for the next hour? Well, as Joe said, I've beaten the S&P 500, and by correlation, 4 out of 5 pros, because the research shows that 4 out of 5 pros underperform the S&P 500. So by this sheer just correlation, I've been able to outperform most of the pros. And that's all starting off as a novice in 2012. I started investing in stocks that I'd heard of, like eBay, Yahoo, Southwest Air, you know, and Skyworks. Skyworks provides chips for Apple. And then in 2015 and 16, I got into these, what I call these hidden gems, these little unknown winners: American Woodmark, Activision, Centa, Quad. I mean, stocks that I'd never heard of, yet the system, you know, pushed them up to me, and I invested in them, and there you go. So you don't have to invest in stocks that you've heard of, and sometimes it's better not to. So I really put that aside now, and it's irrelevant to me whether I've heard of a company or not. It's all about what the chart is showing me. And I do this in 10 to 15 minutes a day because, like you, I'm time starved. I say our new economy is time. You know, nobody has enough time to do what they want to do. So we've got to find efficient ways to do this, and I've been able to do that very efficiently. So let me just take a step back here for a second and go through how I started investing in the first place. And it was back in the 70s, 80s, 90s when I worked for Elizabeth Arden and L'Oreal in New York in the cosmetic business, and then on to the Franklin Mint in outside Philadelphia. And the 401k plans which they offered us had choices of mutual funds. And that was great because I got into the Fidelity Magellan Fund, Peter Lynch's fund, which was really the best fund ever early on. And I also got into Bill Miller's Value Trust at Lake Mason. So I had a pretty good run just picking these funds based on past performance. But that didn't last, you know, forever. And as my career was getting busier and busier and the fund was getting bigger, I didn't feel confident that I knew enough about it to really be managing this. So on the recommendation of a good friend, I engaged a wealth manager, and he immediately sold everything that I had and put it into 8 or 10 mutual funds of his choice. And this is, Mark says, this is pretty much standard operating procedure. This is typical, and that was okay for a while. But then, of course, you know, along comes 2008, and no one needs to be reminded of that, when the bottom fell out. And calling my advisor, as early as September of 2008 to say, hey, everything's looking pretty grim. Everything's really tanking. Don't you think we should sell? The advice was always to hold the course. No, don't sell. They're all going to come back. It's going to be fine. And because I lacked the confidence to override him, feeling he's a professional, I mean, he certainly should know more than I. That's why I engaged him. I stuck with him. But early on in 2009, when the portfolio was down 40%, I really had to call it quits, and I severed the relationship, took the money out, and put it into a Vanguard S&P 500 account until I could figure out what to do. But it was a pretty glum time for me, and I know for many investors as well, because everything I had worked for and given up, I'd given up a lot to sock this money away instead of spend it, and now 40% of it was really gone in a matter of months. It was pretty devastating. But what I did was I took that opportunity to say, hey, this is time now for me to take control. This was the real catalyst for me to say, I've got to figure this out. Sandy, you figured out other things in your life. You can do this. You got to figure this out. And Mark and I were getting together at about that same time too. So Mark is the one who said, look, why don't you take it out of the account, open up a self-managed account at Vanguard, put it into an S&P 500 account. And that's what I did. So since then, the account's up more than threefold, and all is good. But, that experience doesn't go away overnight. So it's something that I keep with me and is part of the reason why I present these webinars and live presentations, to try to encourage you and other investors to take control yourself, because really nobody cares more about your money than you. I mean, think about it. Your money, you've worked hard for it, and you've got a vested interest in it, and you care more about it really than anybody else. So let me pause here and ask you now to jot down and chat out, I should say, some of the challenges that you're facing today. What's on your mind? What's a negative on your mind? What's holding you back from buying a stock, say, or if you own a stock, what's holding you back from selling it when it's going down? If you'll just take a moment, go into that Q&A box and just jot down what's on your mind, what's holding you back. That would really be helpful. Okay, Marcel, thank you. Knowledge of what stocks are worth investing in right now. That's a good one. Obviously, you've got to know which stocks to pick, right? Michael says he's staying in cash, expecting a correction. Ross says loss of money. Rose, I'm sorry, says loss of money. Okay, that's fear of loss, right? That's a biggie. Elliot says he's a total newbie. Well, Elliot, you've come to the right place. Trying to find the right mentor to get me off the ground. Well, hopefully you have, you'll agree at the end of this that you found your mentor. Richard, market uncertainty. Craig, concerned about tax implications. Roberta, what stocks to pick? Don't know where to start. When to sell, says T. Gower. A number of others say time when to sell as well. How long to hold a stock after it starts to go down? Barry, that's again like a how to sell. Bob, psychology. Daniel, trying to supplement my retirement income. Yeah, that's a good idea. And Chuck says stock I own has gone down. Advisors said many times it had good upside. Now down about 30%. Well, see, that's why, Chuck, you and I have to take control of our own investments. It's okay to have a financial advisor, and many of our clients do, and many of our customers are wealth managers. But even if you do have a manager helping you, you've got to be part of the conversation. You don't want to do what I did and just turn it over and say, here, you do it. I don't know anything. You figure it out. That didn't work for me, and I doubt it'll work for you too. So this is a great place for you to get started and get educated yourself so you can be part of the conversation and challenge that call when he says or she says, hey, this has great potential. You might say, I have a different view. Bill doesn't have a strategy. Howard, Trump bounce has run out. Ed, lack of reliable sell end tools. And thank you all. And there's more, but I can't read all of them. But I think we've gotten the gist of it, because these are typically the challenges that I hear from any presentation I give. So the 5 steps that I'm going to be reviewing today address those concerns, and I've already baked in those challenges and the answers to them in these 5 steps that we're going to be covering. Okay, so these are the 5 steps. I break it down into 5 simple steps, and we'll go through one by one. And again, if you weren't on in the very beginning, I do use stocks from my own portfolio as my examples. But at the end of the hour, this is what I want you to feel, as William has here from a previous webinar that he was on. Sandy affirmed that I know more than I think I do about how to use the tools. She's using them successfully with a similar novice background to mine, so I can too. It was a real confidence booster. So those of you who said you're newbies and just starting out, this is the perfect place to get started. What I'm going to be sharing are these screens and the charts from what we call the Financial Freedom Fast Track, which is the Chaikin Analytics platform. It's on desktop and iPad. The examples are going to be from the desktop that I'm going to be showing you today. So why Chaikin? Well, Chaikin Analytics are used by pros, quoted in the media, used by hedge fund managers. And this is just, a sampling of some of the media and hedge fund managers who use Chaikin or have written about Chaikin. So let's get right into the first step, which is to trust proven tools. And a number of you said you don't have the right tools. You don't know which stocks to buy. You got to have the right tools in order to guide you, because if you have something that's giving you inaccurate advice, that's worse than not having anything, because it's leading you astray. So our methodology rests with what we call the Chaikin Power Gauge, which is a very simple rating of a stock's potential to out or underperform the market over the next 3 to 6 months. And it looks very simple here, doesn't it? I mean, this is pretty basic. Green, yellow, red. Color-coded, obviously. Green's good, red's bad. But there's an awful lot more going on underneath the surface that meets the eye. So what this does, though, is it cuts through all that clutter. And I love this slide because I think in today's world of information overload, this is often how sometimes I feel, all this information is coming at us 24/7, emails, texts, direct mail, television, 24/7, cable news. I mean, it's endless, right? So if you feel like I do, that it's just overwhelming amount of information out there, there is a tonic for it, and that's the Chaikin Power Gauge rating. So although it's simple, it's not simplistic. And the way this came about is that Mark came out of his 40-some year, he had a 40-some year career on Wall Street, and then he sold his company to a division of Reuters and retired. And 10 years later, along comes, the 2008 meltdown. And he was in retirement, but he saw that over, I think it was $400 billion or some insurmountable number of money had come out of traditional brokerage firms and was going into self-managed accounts like what I did, setting up my own Vanguard account and managing the money. And he said, well, Sandy, you're now managing this money, but you don't have the education or the tools to know what decisions to make. I said, you're absolutely right. So he said, well, I'm going to come out of retirement because there's a real need in the marketplace for individuals to have the same quality information as the professionals have, but in a way that is easy enough for someone like you, even as a novice, to understand. And that was the genesis of the Chaikin Power Gauge rating and the whole Chaikin Analytics platform. So what you see on the right is what Mark looked at when he was on Wall Street, when he was evaluating or creating tools for the pros to help them make better decisions for their clients about what stocks to buy or sell. Well, if I looked at this, I have no clue what it says or what it means, let alone create a decision from it. So he took all this data, he took some 200 data points and spent about a year building a model. And the model is what you see on the left, which looks pretty simple, right? But there's a lot of little squirrels going on underneath those green and yellow bars. There's a lot of data being driven. That's just chugging along and printing this out in a simplistic way, but it's far from simplistic underneath the surface. So just so you have a little bit of confidence that it's just not me saying that this is a great tool, but John Carter, who's one of our partners, he's a well-respected stock market analyst, really, with Simpler Trading. He uses our power gauge, and he calls it's an awesome meter for stocks. And he says there's a lot of hyped up tools out there, but a single tool that combines 20 technical and fundamental factors to anticipate a stock's profit potential got my attention. It's called the Chaikin Power Gauge rating. And it looks like an objective, awesome meter for stocks. I like that it includes fundamental and technical analysis for stock selection and timing. So most charting packages, as you may be aware, either technical or fundamental. There aren't too many that combine both disciplines of evaluating a stock. So what Mark did was he really put all of the factors that he felt were the key, that tested over time to be the key 20 factors, into this one model, created an algorithm with different weightings by these different 20 factors. And here are the 20 factors. And this all goes into the rating, the overall rating, as you see on the left. So the model is broken down into 4 basic components. The financial metrics, for instance, are factors that a value investor like Buffett is likely to be looking at. He would place more value on those financial metric factors than on the others, whereas a Jim Cramer focuses a lot on earnings performance. So you may have your own kind of bent on this, but for me, I just look at the overall rating. If I'm going to buy a stock, I want it to be at least bullish, ideally very bullish. And then I really only drill down on these 3 factors that I've outlined in red. Price to sales, is important because it compares a company's stock price to its revenue. So it's a good indicator of the value that's placed on each dollar of a company's revenue. Free cash flow is important too. Those 2 kind of go hand in hand. So you might, swap them out. Expert opinions is what is really our secret sauce. You're not apt to find this easily elsewhere, but short interest I've highlighted because these guys are known as the smartest guys on Wall Street. They short a stock, which means they sell a stock before they own it. So they put in a sell order for a stock, theoretically at a higher price. And then when the stock goes down, then they put the buy order in. So they're betting that stock is going to go down, and they're really considered the smartest guys on Wall Street. So I don't want them shorting a stock that I'm interested in, because I tend to buy, for a buy and hold period or a longer view than, well, I don't want them to go down. I want them to go up. So that needs to be green. It's a little bit counterintuitive, but just realize And remember that green is good, red is bad. So you want shorts to be green. That means they're not shorting your stock. And insider activity is really telling, because insiders are only going to buy, and this measures insider buying, they're only going to buy for one reason, and that's because they think the stock's going to go up. I mean, they could be selling for numerous reasons. They've got to pay college tuition, they're taking a trip, they're buying a house. May have absolutely nothing to do with the profit, the potential of a stock. They might just need the cash and be getting out, but they're only going to buy for one reason, and that's because they think that stock's going to go up. So if I'm buying a stock, I want the insiders to be buying it as well. That gives me great confidence. Other than that, I really look at the overall rating and just go with that. Let that be my guide. So here are the four components kind of in action. I've taken a stock that we'll be talking about today, Flextronic. This is the chart as you see it on the Chaikin Analytics desktop platform with a 1-year view. And what I can do is drop down this very bullish power gauge rating that's up in this upper left-hand corner and see what those four components are telling me. And then if I want to go drill down into those component or factors that I was telling you about, for instance, here I've done that on the expert opinion. So I can see short interest is bullish, insider activity is very bullish. So this is strong for this stock, and the price to sales is also bullish. So this meets my criteria as far as the power gauge rating goes. Very bullish rating, and then those three factors are all bullish or very bullish. So that's kind of checks it off my list of criteria. So why models? Well, there's a really strong argument to depend on models instead of our own emotions. As you can see from the performance slide I put up in the very beginning, where the S&P has averaged 10% a year over the last 20 years, whereas individual investors have only averaged 2.5% performance. And that's because of emotions, So a well-known analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And it's not just us, it's the analysts on TV, it's the analysts who may be writing about a stock. They all have emotions. I mean, that you can't get away from it as a human being. So that's why it's good to have your own objective criteria and your own objective view. So a little bit more kind of confidence building on the power gauge rating. We created 3 indexes for NASDAQ going back to 2000, and I think it was 15 was the first year, maybe it was 14. They asked us to take 3 of their popular indexes, overlay the power gauge rating, and filter out the bearish and the neutral stocks, and leave only the bullish rating stocks in that portfolio, which is what we did. They have consistently outperformed their benchmarks for the 3 years since they've been conceived. And then First Trust took notice of these NASDAQ indexes and said, hey, can you create some portfolios for us so that we can take them to our money managers, and their clients can now invest in a portfolio of stocks that's based on the power gauge rating. So we've done that as well. So the power gauge rating is getting momentum behind it. Here are the performance versus benchmark 14. They did come out on 14. You don't need to understand what this says, other than the fact that if you look at that middle view, that the NASDAQ Chaikin Index had a much higher performance, as you can see, than the one on the left, which was the benchmark. So they have consistently outperformed their benchmark since inception in 2014. All right, so I'm going to move on now what to buy. And many of you said this was a problem. You don't know what stocks to buy. Well, write these 4 points down. This is going to make it really easy for you. we have what we call a term called classic bull. And what that means is it's got to have a power gauge rating that's bullish. You want the price to be trending up. After all, if it's going to be flat or down, you certainly don't want to invest in that. You're looking for upside potential. Money flow is strong. I'll explain that. And relative performance is strong. So if you write down these 4 items, this is your laundry list. This is your checklist for considering a classic bull. So you don't want to buy a stock unless it meets these criteria. So let's look at a few examples. Lam Research is a stock that I recently bought back February 23rd on this yellow arrow here. And I bought it because why? Well, let's break this down, this classic bull, okay? The power gauge rating was the first criteria, and we wanted that to be bullish. Well, if you look at the ribbon on the very bottom of this chart, you can see for the most part it's green, which means that the stock had a bullish power gauge rating for most of 2016 for the last year, or 2016 into 2017. So that's good. Remember, that's 20 factors. Each of these other indicators you're looking at here, relative strength is 1, money flow is 1, power gauge represents 20 factors. So if you're going to go with one guideline, it's the power gauge. That's the strongest thing because that represents 20 factors rolled up into that overall rating. All right, so the next indicator right above it is relative strength. This is this heat map that you can see for the most part is green with a little bit of red down in May. And the green means that this is outperforming, this stock is outperforming the S&P 500. And the S&P 500 is the benchmark against which most investors and professionals will measure themselves. And it's what I use when I gauge myself. The S&P is doing X and I'm doing X, therefore I'm X% over the S&P 500, which is good. Because if you're really just looking for average returns, which aren't bad, 10% a year for the last 20 years on average, go with an S&P 500 index fund. And I even have some of my money put in an index fund just for diversification. So that's always a good thing too. But if you're looking for those outsized returns, like I showed you for say Quadrangle up 189% last year, NACO Industries up 114%. You're not going to find that by just going with an S&P 500 index fund. You're going to find that by looking for and discovering these classic bulls. So I'll come back to overbought, oversold, but let's jump up here now to Chaikin money flow, which is this kind of mountainous range in here. This is the indicator that Mark created some 35 years ago when he was on Wall Street, and he created this to show the institutional buying and selling of a particular stock. So green obviously means that institutions are buying. Red, as you see here back in January, means institutions were selling. And this has an enormous impact on price. As you can see, when other things are equal, power gauge, relative strength are still green, as they have been for months. But when you get money flow going negative, the stock tends to go sideways. And it went up a little bit here, but nowhere near where it went once money flow kicked in. And that's an interesting thing for those of you that are new to investing. It took me a while to understand this concept. But a big driver of price is supply and demand. So if institutions are buying it, they're placing a lot of demand on a stock. And just like any commodity, when there's a big demand on something, it's more scarce, it's more desirable, so you can get a higher price. It drives up the price because of the scarcity. Likewise, if they're selling it, they're putting it out on the market and there are fewer buyers for that, it's going to lower the price. So you want to follow the money. I mean, bottom line, Chaikin money flow allows you to follow the professional money and see what the pros are doing and going with them. So you and I as individual investors are not going to impact the money flow indicator, but these institutions that trade in great big huge volumes, they move the price. So you can see here where there's a big chunk coming in, look what happens. Everything else is equal, right? But look what happens when there's a big chunk of money flow coming in March. The price really pops up. I sold this stock, and I'll get into that on the sell section. I just sold it today. And I'll cover the why when we get to that when to sell section. So let's look at this. This is, when I first looked at this, I thought, oh my God, I'll never understand this. So take away all the words and just look at the squiggly lines here, the zigzagging. And this is basically the way a stock price moves. And this was created by a Dr. Wyckoff some 95 years ago when he was teaching how to invest in the stock market. And he charted this, and it's still like money flow and everything else, you know, human behavior is human behavior. So it still falls true today. It stands up to time. So a stock price doesn't perform the way, say, a fragrance in my industry. I marketed high-end fragrances for Elizabeth Arden and L'Oreal. A fragrance, say Karl Lagerfeld for men, for instance, was $100. Whether you bought that fragrance in January or 6 months later in June, the price is the same. Obviously, that's not the same with a stock price, and understanding the way a stock moves by looking at this and kind of grasping this will help you understand when to get in and out of a stock. Big help. And we'll put that into practice. So let's look at another classic bull. Again, the power gauge rating has been strong, but really only since December. Relative strength started out really strong. It's not quite as strong now, but it's still outperforming the market. And back in December, there was a big chunk of money coming in, and it's still positive. It's natural for there to be these little dips. That's nothing to panic about. That happens. If they're persistent, then that's something else again. But it's not a panic point in and alone of itself. But I also overlaid this one-day view, so you can see what that stock is doing. You can see I took this slide at 10 a.m. this morning when the stock was 81.85. It was already up 8%, and it had reported earnings the night before. And when stocks report earnings that exceed analyst expectations, they tend to spike, as the stock did, up 8%. This can be a really great short-term gain. And I wasn't in this stock. This isn't one that I own. But if I had owned this, I would have sold it today on that spike because they tend to come back again. But we incorporate news stories. So I've added them on some of the bottom. Some of them I've just excluded to keep the chart more simplified. But you can see here that the news story was out today saying it climbed to a new high after a Q3 profit beat. And they had this on CNBC this morning as well when they were talking about DARDEN. The reason being is that Olive Garden is coming out with a new menu. And it has delivery. You can order it online and it's delivered, I believe. It's these virtual type of things. You don't have to go to the restaurant. So that's been driving, the higher than expected profits. But you know what? You really don't even need to know that. All you need to know is it's bullish. It's a classic bull. It's trending up. And look at the way it zigzags. It zigzags sideways. It spikes up, sideways, down a little bit, sideways, up, and down a little bit. And that's typical. So when you're buying, you want to be buying when it's dipping down into these little troughs, and you want to be selling when it's hitting up here. And that's something to keep in mind as you're looking at these charts. And again, I'll go into that in more detail when we get into the selling screens, when I sell. All right, so how do I find these? And so many of you said you have trouble finding what stocks to buy. This makes it so simple. We came out with this, what we call a screener, back over a year ago. And since then, it's really simplified my research, because I can put my criteria into what you see here. It's called the screener. I can save this criteria, which I've done. So I just, with one click, I've got the criteria popped up, and then I can hit scan, and it'll scan any list. It'll scan, say, the SP 500, it'll scan my watch list, it'll scan the Dow 30, it'll scan an industry group, any list you want. The universe I use is strongest industries, because that's one of our steps coming up. Investing in strong stocks and strong industry groups is putting the best potential behind you. So you want to go with the strongest potential. So I scan for strongest industry groups. Then you can see the power grade rating needs to be at least bullish. It'll also include very bullish. And those three factors need to be strong that I talked about. And then if you scroll down to money flow and relative strength, these were the needed to be strong and were the criteria we use on that classic bull. And recently I've moved to mid and large cap stocks, because they've been outperforming the small cap stocks, unlike last year where I was mostly in small cap stocks. So this is how you can find the stocks. And most of the stocks that I'm talking about today, I found thanks to this screener. So you don't have to spend hours of research going through all sorts of stock charts looking. You just scan it in. And Joe and his team cover this. When you subscribe, as early as tomorrow, you'll be in what we call an onboard session. And part of what they cover is how to set up your screener and what my criteria are. So if you want to just start creating lists based on my criteria, get used to it, get your eye and your brain kind of used to looking at those views. That's a great way to get started as well. All right, we just got this testimonial, and we get testimonials a lot. Gosh, every week, every day. But this one was particularly, I thought, telling and obviously relevant. It came in yesterday. And Norm says that his account now stands in excess of $1 million. Before Chaikin, he would make money and then lose it. Does that sound familiar? Any of you feel the same way? You would make it and then you'd lose it. Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So again, it's the discipline methodology. It's this disciplined 5-step method. And I've been following that, and it's been working for me. And so that's what I share with you. All right, let's move on to step number 3. Also, what to buy. I referenced strong industry groups. And why is that important? Well, every stock, there's 5,000 stocks, are kind of bucketed into one of 64 industry groups. And Zacks research has basically come up with kind of the industry group standards. So you see them here listed on the right: investment fund, coal, miscellaneous technology, etc. Well, what we do is we rank them based on the proportion of bullish traded stocks in each of those industry groups, and then the strongest industry groups rise to the top. So why is it important to invest in stocks in strong industry groups? Well, if you took even an average stock, say a neutral rated stock in a strong industry group like technology, that would most likely outperform even the strongest stock, say a bullish rated stock, say in a weak industry like oil. So if you're shopping for stocks, go with the best, right? I mean, you might as well go with the strongest, the ones most likely to succeed, the ones with the highest potential. Well, you could look through these industry groups, and I've highlighted like miscellaneous technology that has 29 bullish stocks. And then I've also highlighted electronics because many of the examples I'm going to be showing are in either of those two buckets, and electronics has 41. Well, we could go then click on, say, technology and scroll through each of those 29 stocks, but that's pretty cumbersome, isn't it? I mean, looking for the perfect stock. A much easier way of doing it is to take the screener. Go with the screener. The screener, by putting in top industry groups, or strongest industry groups rather, will automatically give you only the top 20%. So you'll get the top 12 industry groups, basically. I mean, isn't that a lot easier than going through everything else, looking for them? So here's a scanner I ran this week. And I run these at least every week, if not more intermittently. But you can see with that criteria that I outlined before, the power gauge rating, those three factors: strong relative strength, strong money flow, bullish power gauge rating, strong industry, and then mid cap or large cap stock. Out of a universe of 5,000, I got 4 stocks. I mean, imagine whittling down 5,000 stocks to 4 in literally 30 seconds, and that's what you're looking at. So I just took a screenshot today so you can see what these stocks are doing today, and let's look at a few of them, because these again are classic bulls. So those of you looking for good stocks to buy, that's the easiest way to find them, and you get to 4 stocks very quickly, this being one of them, Applied Materials. So I already know it's a strong industry group, or it wouldn't have been picked up by the screener. But up here in the chart, it does say the industry is strong. Over here, it says the power gauge is very bullish in that top left corner. And what do you think? Does this stock look good? I mean, tell me. You tell me, guys. Just type in your Q&A if this looks like a stock that you think would be a good candidate to put either on your watch list or to buy. Winner. Yeah, Elliot says it's a winner. Right. I mean, that's how easy it is. It doesn't have to be more complex than that. Brian says yes. Michael, COHR. I don't know quite what you mean there. Jim, absolutely. Marcel, looks good and it's oversold. Oh boy. Okay, you set me up beautifully. Thanks, Marcel. Okay, so what's oversold mean? Well, I told you I would tell you about this indicator, this overbought, oversold indicator above relative strength. What this does is it measures those zigzagging moments that a stock price does. It measures the highs and the lows. So you will find that these peaks up here correlate with peaks in price. When it pulls back, as it does here, into this 30 range, this is when you want to buy it. And this could happen in a matter of 3, 4, 5 trading days, going from top to bottom. Because remember that Wyckoff chart, this is the way stocks move. They don't go straight up and they don't go straight down. They zigzag. And you want to buy them when they're down here, which is called oversold. And you can see it's this little zigzagging. It's zigzagging down, right? 36.86, 38.86 is the price today. So I'm going to be buying this stock tomorrow. I like everything that I'm looking at right here. It's a really strong power gauge rating, really strong relative strength, really strong money flow, and it's oversold, meaning it's dipping down. So it's given me the right time. And these green EPS means that for the last 4 quarters, this stock has exceeded analyst expectations. And you can see what happens each time. It tends to spike up. And they are reporting May 18th. So I would mark this on my calendar, make sure I'm watching this stock going into that earnings report to make sure everything is still green. But that's my thinking. You know, that's how I come to say I'm gonna buy this stock tomorrow. It's as simple as that. It's just from that screener last week. It looks great. Green is go. Okay, so let's look at another one. This is Flextronic. This was also on that screener from a few days ago. And tell me what you guys see here. Does this look like a good stock to buy as well? You'll again just go into your Q&A window and chat what you see. Beetroot looks good. Bought some Friday. You're awesome. That's great. John also says AMAT is great. I own it. Great. We must have you guys must be subscribers. This is great. I'm thrilled. Okay, so let's see. For this one, let's see. Money flow dropping. Yes, money flow is dropping. It appears to be retracing. Caesar says, do you look for divergences? Well, I mean, that's the overbought, oversold, and that's all the zigzagging are kind of the divergences that I look for. All right, so you guys aren't quite as bullish on this stock. I understand that. And I might pause a little bit anyway, because it's certainly not down here on the 30. The overbought, oversold needs to come dip down, right? You don't want to buy a stock when it's up here. And money flow, as some of you have noticed, is also not quite as strong. So I would put this one kind of on a hold pattern and look at this as I do with my watch list. I scroll through my bullish stocks every day and see if anything's changed and an opportunity might present itself then to hit that buy button, but not right now. Also, here's an article I point out to you that Citigroup has given this an $18 price target. You can see it's at 1662, and this is a recent article. So that's interesting, kind of to put in the back of your mind. So that's basically the way I evaluate. And I'm covering this section of how to buy and what to buy, not only because many of you cited that as one of your main challenges, but it doesn't do you much good to know when to sell if you don't know when to buy in the first place, because then your whole equation is going to be topsy-turvy. So that's why I'm taking the time now to cover this. All right, not enough time. We're all time-starved. The screener can really help. It helps me in enormous amounts with that time issue. Okay, what to avoid? This I'm going to just kind of zip through quickly because it's the exact opposite of what to buy. Yum Brands was in the news today. The CEO was on saying how great their stock's going to do because of the economy and Trump's proposed tax cuts to corporations as well as to individuals. It's all going to help them. Do you buy that? Does this look like a stock you'd like to buy? Again, on this one, everything is pretty much red where it was green before. And I'll point these little triangles out. These are sell signals that are triggered along the way. So this is not a stock you'd want to buy right now, right? Unless you wanted to short it. The Wyckoff chart, again, this shows this pattern of going down. And this is helpful to know when to sell, because you don't want to sell, say, when it's dipping down. You want to sell when it's, zigzagging up. And understanding this, the way the stock price moves, will help you make that decision. So here's another pretty much bearish. It's just turned neutral, but it's been bearish for so long I included it. Relative strength is poor. Money flow is kind of okay. But again, you're getting these sell signals. These triangles are alerting you to a condition that is saying you might want to consider selling this stock right now. And notice when the power gauge turned negative back here in May, the stock was at about, what was that, about 45, I guess, 46. You know, and it's now down to what, 42. You can't always depend on the analyst to help you. The analysts at Goldman Sachs came out in early January saying, hey guys, now it's time to sell this stock. We've downgraded it. Well, that was 6 months after the power gauge turned bearish. So you don't want to wait for a stock to decline for 6 months before you get the word from Goldman Sachs that it's a sell. Okay, I've been pointing these triangles out as we've gone along, when to buy and sell. There's 6 pairs. They each have certain conditions that have to be met. And they're not hard and true, you got to sell this now or you got to buy this now, but they're very directional. And we call them alerts. They're great ways to bring to your attention that there's something going on in this stock and you might want to consider taking action now. And I also highlight this overbought, oversold, because again, that's really helpful with your timing. All right, so how do you find these signals? Well, you can overlay what we call the alerts view, which is this little bell up here on any list. And this is part of my 10 to 15 minutes a day due diligence, walking through this alerts view on my watch list as well as on my list. And because I only own 8 or 10 stocks at any given time, I can get through them pretty quickly. And on my watch list, I'm really only interested in the bullish stocks. So I just, you know, scroll through the ones at the top because the bullish ones are listed first. So it's telling me that there is a relative strength buy signal on U-Haul. And here is U-Haul. And you can see the buy signals here triggered, and the price is really spiked up. So I would not be buying this stock right now because it's overbought. I would want to wait for that to dip down. Relative strength is just singularly looking at the relative strength, saying, hey, this stock is starting to outperform the market. And you can see the power gauge has just turned bullish. And the article down here, which you can then click on and go to in the workstation, says that there's a consensus target price of 427. So you can get pretty much all the information you need to know to make a decision in one place. But that alerts view is really helpful, and you can overlay it too on the sell side on stocks you own. I rarely get a sell signal because I'm usually out before those do trigger. But if some of the stocks you own trigger a sell signal, that's a really serious time to take a hard look. Okay, knowing when to sell. There's 2 scenarios. Either you're taking a profit, it spikes up, or you can sense that stock is breaking down. And these are really the 2 scenarios that any decision will fall within. All right, I told you I was going to give you rules of when I sell. So these are the rules. The price hits the upper volatility band. The price is overbought, meaning it's zigzagging up, or that it spikes up after a strong earnings report. And let's look at a couple of examples, okay? So this is a stock that I bought, Maiden Holdings. I bought this back here in December, early December at 16. You can see that it correlates to this oversold condition, this dipping down of 30. Everything was green, money flow was good, that was good. And then this stock really took a big spike up in this week in February, this early week in February. And it bumped up to this upper volatility band. And this is one of my rules. When the stock bumps up to that upper volatility band, it's a really good time to take a look and say, hey, maybe I better take my money off the table and take the profit. I'm a sailor, so I equate this to a channel. And when you're in a sailboat or a powerboat, you want to stay in the channel so that you don't run aground. And it's pretty much the same thing here. You want to take your profit when it's bumping up here. Also, if you don't take it up there and you see it dipping down below this lower volatility band, that's also a time to just get out of this stock before it breaks down any further. So it's a good guideline. What else do you see on this stock, on this chart here? At the time, February, was it 13th, when I sold it, it was at its all-time high of, it was almost 19. Power gauge was still strong, but this money flow was just starting to turn. So money flow turning combined with hitting the upper volatility band, I said, I'm going to take my profit. And I took a really nice profit. I took like a 17% profit, I think it was, in a matter of weeks. And actually 2 days later, look what happened. They pre-reported, which was really odd. They don't usually do that. But they pre-reported and they said, we're going to have a terrible earnings report. So the stock dropped 10%. And you can see since I sold it, it's continued to drop. Since then, it's down now 27%. So it would have been heartbreaking to have that nice ride up here, that 17% profit, only to see it drop further down. So that's why these rules are really important. You know, when that money flow starts turning, and I've been pointing money flow out on all of these charts, that's a really solid indicator to say, hey, now might be the time to get out. Now, this is a stock I've been talking about for a matter of months now, Progressive. I've been using this as a classic bull. I mean, it still is. Everything is still pretty much green, with the exception of money flow. But look what's happening over here on money flow at this little circle that I've highlighted here. It's starting to go red. Can you see that? So I bought this stock here. Again, this was a nice buy signal I got. So I got alerted. It looked good, dipping down, right? Money flow was strong. It was a money flow buy. So I bought this stock back mid-February at 37. And I just sold it last week at 40. And again, it was hitting this upper volatility band. And even though power gauge and relative strength are strong, I could see that money flow was starting to turn. And it also wasn't making as high of a high. It tried, right, to dip up or spike up. It didn't make it up. It just kind of fell back again. So I said, I'm just going to take my money off the table, and took my profit here and sold it about 40. So that's how valuable it is following these rules. Now let's look at one more. Same rules, taking a profit. And this I just sold today. This I used as a classic bull in the beginning, because it's kind of an example of both when to buy and when to sell. Okay, I bought this in here late February with this money flow buy signal. And again, everything lined up, including overbought, oversold when I bought it. But today, it's bumping up to its upper volatility band. And everything is still strong. But I'm also looking at this article from, this would be Tuesday, that it's the number 16 most shorted stock. So I'm thinking, boy, I believe in those short sellers. They're the smartest guys on Wall Street, as I said earlier. So I drilled down into the power gauge rating, and I could see that the shorts and insiders were now neutral. They obviously were bullish when I bought it. They've now turned to neutral. So all these little things put together give me pause to say, I'm going to just take my 9% profit in, what is it, 4 weeks, and sell the stock. And you can see by this drop-down menu here, I could really time when to sell. You know, if I see it dipping down here, for instance, you know, I sold it up here. I sold it around 10 o'clock in the morning. And I also got this alert that it hit its 52-week high. So, I mean, that's damn good, right? It's as good as it gets. So I don't want to be greedy. I want to just take the profit. 52-week high is awesome. And to make 9% in a matter of weeks is awesome too. So sometimes it's better just to take your profit and be happy. But these are the rules that have worked for me. And they've also worked for Anil, who's one of our subscribers. He also teaches the stock market class at University of Delaware's continuing education program. And he invited me in the fall to come out and speak to his group, which I did. It was really fun. And after that, Anil wrote me and he said, you know, I followed your sell rule, and he sold EME yesterday at a 52-week high. Took a 23% profit in 3 weeks. That's cool. Actually, that should say 4 weeks. It's 4 weeks. And he said his sell rules are more complex, but he said, I'm going to follow yours in a test portfolio. So I got back to him a few weeks ago saying, okay, Anil, what happened in the test portfolio? And as you can see on the bottom right, these are Anil's sells with the time frames and the percentage that he makes. So it's not just me that's using these sell rules. They're kind of validated in real time by Anil, but test them yourself. You know, set up a test portfolio and, you know, take your notes of when these conditions are met and what the price is, and see if that would have been a good time to get out of this stock had you own it. I mean, do your own little test if you want to. So the other time to sell is when you see a stock breaking down. Now, Maiden Insurance kind of was taking profit and breakdown. So, you know, sometimes they cover both. But for the breakdown, my rules are that it turns neutral, power gauge turns neutral, and another indicator turns negative, particularly money flow. Certainly if they get a sell signal, or if that price drops below that orange line, which is a 200-day moving average, or if it drops below that lower volatility band, which is this band down here. So let's look at this in a real example of a stock that I bought back in June. I bought it on a 5% pullback, June 24th with that Brexit vote. Everything lined up. Stock went up. This would have been the ideal time to sell it, right? I should have taken the profit here, right? I didn't have these sell rules kind of firmly identified at that time, but this would have been the great time to sell it. Instead, I kept it until November, and that was probably too long. But I sold it right before the election because I wasn't really sure what was going to happen, as none of us were, with the election and with the stock market's reaction to it. So I sold it when it crossed this orange, this 200-day moving average, and started bumping up into its upper volatility band. You can also see the stock was starting to break down by the neutral power gauge rating and the negative money flow. Relative strength was still okay. But look what happens when relative strength turns negative in addition to, you know, then you start getting, you know, this downward trend. And look what happens when they really, you know, the money really is sucked out of this, then it really starts declining in price. So you obviously want to be out of this stock before then, and these rules can really, you know, really help you. Because there's nothing more heartbreaking than seeing a nice profit turn into a loss. I mean, that's really not what we want to do, right? So let's recap these 5 steps. And in order to know when to sell, you've got to first know what to buy. But my promise earlier on was that I would demonstrate to you how to find winning stocks and make buy-sell decisions with confidence so that you'd be confident versus fearful investors. And the point of all this is so that you can make more money in the stock market with less risk and spend some of that money doing things you like to do. So start thinking about how you'd like to spend some of these profits you're going to be making. And I use this, we often term my webinars as appropriate for investors at all levels, from novice to knowledgeable. So Steve is a novice investor. His daughter got married in Istanbul, Turkey a couple of years ago. That's why we went over there for his daughter's wedding. But he says, "You two are the dream team, genius of Mark to create this functional system and the brilliance of Stanley to learn this stuff and present it with such frankness, simplicity, and caring. I think I can learn this amazing thing too." And that's why I put this in here, because this is a novice investor. This is somebody who's never invested in stocks. And he says, "I think I can learn this amazing thing too." So that's really what I want you to walk away with. And because we are also appropriate for investors who are all knowledgeable, as is John Malden. John is one of our partners as well, one of our webinar partners. He says his analysts use Chaikin, and they analyze the trades and recommendations of our writing team, giving them feedback and insight into their own ideas. Mark's system has been integrated into our routine due diligence process for vetting and evaluating potential stocks. So it is truly useful for investors from novice to knowledgeable. So all of this is available on what we call the Financial Freedom Fast Track. We've added the screener, which is what I've shown you a little bit of tonight. The options, there's an options overlay we didn't have time to cover, but Joe will cover that on your onboarding, as well as special sessions when you become a subscriber. And the earnings alerts, I alluded a little bit to the earnings alerts, but this is a really new functionality we've just added. We call it a discovery engine. And remember, one of the bulls in the what to buy section was DARDEN. So I see that you can seed this discovery engine just with one click. You click, I put DARDEN in, and then it gives me, as you can see here, a menu. Stocks like it. Similar short candidates. You can see Yum here with the bearish rating. That was one of our bearish examples. And there's more down here, other stocks with bearish short interest. So whether you're looking to sell or to buy, the stock discovery engine can give you some really great ideas. So normally we price this subscription for an annual subscription at $1,950. We're taking $200 off, but I am going to make that a little bit better for you to say yes tonight, if you'll just stay with me a few more minutes. But all of this package, this fast track package, includes the annual subscription to Chaikin Analytics, the discovery engine, the options overlay. You'll get a weekly commentary from Mark, which many of our insiders, our subscribers, use diligently and really follow his guidelines. And then what I've highlighted here in red are the coaching calls, because if you don't know how to use it, it's not going to do you a whole lot of good. And our success depends on your success, and we're really totally committed to your success. So we get you on a coaching call as soon as tomorrow in a small group, walk you through how to set up a list, how to be alerted to those signals, how to know when a company is reporting earnings, that type of thing. And then if you can attend as many as you want, but if you want something really personalized to your own trading style, you can set up a one-on-one session with Joe or one of his colleagues in customer support. Additional bonuses, the screener, the earnings, you get a daily email from our chief market strategist. You can go look at sector performance, in addition to industry performance. There's all sorts of stuff in there that no way we can get through close to an hour. But I said I would make this a little bit better for those of you who take action and subscribe by midnight tonight. Take an additional $100 off the subscription price and get into Chaikin Analytics for $1,650 a year. So I'm going to turn this now over to Joe, and thank you all for being a great audience and staying with me. And I hope I delivered on my promise so that now you too can invest with confidence.
Awesome. Awesome. Well, thank you so much, Sandy. Thank you all very much for sticking around this afternoon. Just to reiterate Sandy's message, again, that is $1,650 for a complete year's worth of access to Chaikin Analytics. If you check the chat room, not the Q&A window, but the chat room, you'll see the fulfillment page, actually a link to the fulfillment page. Very simple, chaikinanalytics.com/Sandy. I know there were a lot of you who had questions about individual stocks. I know we weren't doing a live Q&A today, but our support team is going to stick around a little bit later tonight if you do want to take a look at some individual stocks. But again, you can go right to chaikinanalytics.com/Sandy or 877-697-6783. We will be sticking around tomorrow for the onboard session. As Sandy mentioned, we're going to bring you completely up to speed. I know a lot of you have experience in the market. Some of you do not. The onboard session is going to help each one of you identify what you're already doing, or what we'll do is we'll actually set you up with a good strategy to get started with. But all of that, of course, is included in your subscription. And I just want to read one last comment that came in before we wrap up. I see here that Elliot mentioned, Sandy, you are awesome. I learned so much in the past 75 minutes. Cannot thank you enough. Wish you were available as a personal mentor for getting underway with all of this. So thank you very much, Elliot. That's a very kind comment to chat in at the end of our webinar.
Elliot, thank you. I do appreciate hearing from you. That's great. I'm glad it was helpful.
Awesome. All right, everyone. Well, thank you so much for coming out. Keep an eye out for the webinar recording tomorrow morning. We're going to email that over to you. In the meantime, again, 877-697-6783, chaikinanalytics.com/Sandy, and we will see you tomorrow on the onboard session. Have a good evening.